Candlestick investors have a huge advantage because they can see the patterns that illustrate what's happening in investor sentiment. These patterns are identifiable because they have worked for hundreds of years, showing what actually is going on in the decision-making process of buyers and sellers. As we can see, the Dow has been moving up nicely, consolidates back to the T-line. Moves up nicely, consolidates back to the T-line. Now we're moving up again. But even on days like today where the Dow was down slightly, if we know that the NASDAQ was up higher today, that there's no change of investor sentiment. The trend is still in progress. Knowing the nuances of trend analysis because of the candlestick signals and patterns allows investors to have a much higher degree of probability of being in the right positions at the right time. The NASDAQ still using the T-line as support at the same time the Dow has been using the T-line as support is a good indication that investor sentiment is still moving in a positive direction. Knowing that also allows investors to take advantage no matter what market you're trading. The big stocks like Amazon. Note when Amazon broke through this resistance level. We know we can stay long because now we're in a wave 1, wave 2, wave 3 because of the buying that took you through that resistance level. The same scenario can be applied to Netflix. You can see the fry pan bottom. We have a doji sandwich. Big day, doji, big day. We knew from the simple doji rule that if it opened positive, the magnitude of this candle was probably going to be the same magnitude as this candle. And what did that tell us? That the 50-day moving average was not acting as resistance anymore, that we were probably in a strong uptrend. How long do we stay in this uptrend? Until we see a candlestick sell signal up in the overbought area and we've moved too far away from the T-line. These are all simple indicators to show what normally happens in human nature to allow the candlestick investor to be in at the appropriate time and look for the time to be out at the appropriate time. There are 12 major candlestick signals. 6 bullish, 6 bearish. A bullish kicker signal is one of your most powerful reversal signals. When it opens here and closes here, the next day they open it above where they opened it the previous day and go positive. That tells you the investor sentiment has been kicked in the other direction. You can stay long on a high probability, profitable trade until you see a sell signal. That same scenario is in our buying of CLLS, which is what created a bullish flutter kicker signal. And now we have a very simple parameter that allows you to sleep well at night. You stay long until you see a sell signal and a close below the T-line. This is not rocket science. This is just simply using the visual signals and patterns that the Japanese rice traders have demonstrated to us from over 400 years of utilization to show you exactly what's going on in investor sentiment. Prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals. Candlestick analysis is merely the graphic depiction of what's occurring in human nature. That'll be it. We'll see you in the chat rooms.